Thank you for joining us. Welcome to Business Incorporated, coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwagu. On the show today, Nigeria's central bank set to hold its last policy meeting for the year next week. Kenya Airways narrows its pre-tax loss to 3.77 billion shillings in the first half. Plus, Tunisia's economic growth remains stable at 2.1% in third quarter. We get started now with the markets, and here on the African continent, the Nigerian stock market, PZ and Nigerian breweries were topping the gainers at intraday, helping to place all share index in the green zone, 0.06%. The market in South Africa entered back into the 60,000 mark, up 0.82% at intraday. In Egypt, the index tumbled 1.27% on Thursday, triggering a minor double top formed by the highs since end October and pointing down to around 13,500 points. The market is closed today for the weekend. Kenya traded in the green on Thursday. And in the Middle East, Saudi Arabia's stock market closed flat on Thursday, apparently in response to buying by state-linked funds, while Qatar rebounded from a 6-year low as blue chips regained strength. The Saudi index spent most of the day lower and was down as much as 0.9% before a burst of buying in the final 20 minutes lifted it to close 0.02% higher, a pattern seen on almost every day since the government announced a sweeping anti-corruption purge 2 weeks ago. Many asset managers believe that with over 2,000 bank accounts frozen in the purge and many tycoons and individual investors alarmed by the huge extent of the crackdown, state-linked funds have been mounting an operation to stabilize the market and prevent panic from spreading. Dubai stock index edged down 0.21% as Emma Properties closed 0.3% lower. It priced the IPO of its unit Emma Development at 6.03 dirhams per share in the lower half of an indicative range of 5.7 to 6.9 dirhams set earlier this month. Some fund managers said the pricing was lower than Emma could have achieved given the size of institutional demand, and that Emma seemed to be accepting a lower pricing to make sure retail investors bought into the IPO. Looking at Qatar's index there, which has been slumping partly because of the sanctions imposed on Doha by other Arab states, that index rebounded 0.83%. as blue chips recovered. Qatar National Bank climbed 1% and Bauer Real Estate surged 3.4%. Abu Dhabi market was down 0.22%. We move now to Asian market, where shares closed mixed on Friday following the firm lead on Wall Street in the last session. Japanese and Hong Kong markets ended the session with gains but were off their session highs. Japan's Nikkei 225 rose 0.2% as broad gains were seen across sectors. Now, across the Korean Strait, the Kospi had early gains to close 0.03% below the flat line at 2,533.99. Australian S&P ASX 200 rose 0.23%. Greater China markets were mixed. The Hang Seng the Shanghai Composite lost 0.5% and the Shenzhen Composite fell 2.78%. And then we get back to the U.S. and to the Europe open markets, which, of course, this morning investors digest further earnings and data. Also on the radar for today is a speech by European Central Bank President Mario Draghi, which took place in London. Let's get the details from Janelle. Good afternoon, Janelle. Thank you very much for joining us. So the ECB chief, Mario, gave his speech today and, of course, indicated that the central bank needs to be patient in normalizing policies despite the improved economic situation in the Eurozones. How are the currencies, stocks, and the bond markets digesting Draghi's speech?
Well, you know, the euro actually rose on his remarks 0.3% to 1.18 to the dollar. Now, let's remember what happened when the ECB first announced 3 weeks ago that it was going to start halving the volume of the assets that it was buying under the stimulus program starting next year. At that time, we saw the euro rise and government borrowing costs fall amid rising stocks, despite the fact that this would actually have been normally seen as a tightening signal. But that was the reaction we got at that time around because the ECB kept many things the same. It signaled then that it would continue to buy bonds until after, for the duration of 2018 at least. It said that it would keep interest rates low. And now that Draghi has reiterated that he's not in a hurry to introduce drastic changes to the program, even amid the backdrop of a return to growth, well, then we're seeing much of a similar reaction instead. And the European Central Bank's main brief, of course, despite this growth, is to maintain price stability. And as long as inflation remains below the 2% target, the policy isn't set to change drastically. Just yesterday, we saw forecasts confirm inflation at 1.4%. Some analysts are even saying that Draghi might not even raise the rate during his term. Let's remember that he is set to leave already in October 29.
Now, how much of the troubled Alitalia's delegation meeting discussions with Lufthansa do we know at this time? And is the marriage in the offing?
Well, we know that Alitalia's had government-appointed commissioners met up with a Lufthansa delegation yesterday, since Lufthansa threw its hat in the ring expressing interest in buying parts of Alitalia. So there certainly seems to be a romance brewing, but at the moment there's not too much indication yet that a marriage is certainly in the cards. So reports in the past days indicated that Lufthansa would have been prepared to pay 250 million euros for the lion's share of Alitalia's fleet, as well as take over half of its employee base. But representatives from Alitalia have said since then that those rumors were baseless, without really offering an alternative explanation, and thus letting speculation fly there a bit more. Suffice to say, this could be part of a larger trend that analysts say that we're going to keep seeing in the aviation sector. As the skies become too crowded, you have smaller airlines just like Alitalia that don't have the same strength that flagship carriers have, and nor do they have the attractive prices of the smaller budget airlines like EasyJet or Ryanair. And as such, observers are expecting a period of consolidation within the sector where these smaller airlines are eaten up by bigger ones. So just recently, we had the example of Air Berlin being taken over by Lufthansa, so that could be the start of that wave, and this story with Alitalia now could be part of the continuation.
Well, Janelle, looking behind you now, it's not a particularly pleasant Friday for the European stock markets. We can see the movement of the DAX there. What's the market doing? Why did your stock stumble? And what's the outlook for next week?
Well, not a particularly good week at all for European markets, as we've been seeing, as we've been talking together this week. And the reason for that seems to be a bit of a mixed bag. The earnings season is now slowly coming to an end. You have 90% of U.S. companies and European companies already having released their quarterly results. Analysts say that these results were supportive but weaker than in the previous quarters. Other analysts would say, on the other hand, that there is simply a depressed appetite for risk right now, and investors are eager to lock in gains. Now, looking forward to next week, there also seems to be a bit of a shortage on triggers when it comes to stock market activity. But here in Europe, the talks ongoing between the parties that could form Germany's future government would certainly still be on the minds of investors in Europe, Germany, of course, being Europe's biggest economy. In the U.S., on the other hand, investors will be looking there towards the Fed minutes released, of course, 3 weeks after the FOMC meeting as traditional, which was on November 1. But we will also have the Thanksgiving holiday going on, and that's expected to mute market activity as well.
Well, Janelle, I guess it's been a beautiful week for both of us on the show. Thank you very much, and do enjoy the rest of the weekend.